everyone, my name is Karen. I am part of the marketing team for ESPC. Thank you so much for coming along to our Buy to Let webinar today. We really appreciate you taking your time to ask us your questions and hopefully we answer them as fully as possible. So the format of today, we will start with Nicky, who is our head of lettings. She will be giving us an overview of how the market is looking and what's been happening in the buy-to-let sphere. We've also got Paul Demarco on the call, who is from our mortgages team for ESPC. And we do have Michael Maloco coming on the call. He is having some technical issues at the moment, but we hope he will be on to provide a point of view from a solicitor and conveyancing side. Just to let you know, we have received a lot of pre-submitted questions in advance. Some of them have overlapped, some of them have the same themes, so we've tried to group them together as best as possible. But if there is something you feel that we haven't got round to, or there's something you'd like us to expand on, please just pop a wee note in the Q&A box at the bottom, and if we have time at the end, we'll do our very best to get round to them. I also will say now that once we have finished the webinar, I will be sending out an email afterwards with our most recent house price report and some details. Hello, Michael. Thank you so much for joining us. Just to let you know, we're live, so no worries. I'm just giving the introduction. So yes, this is Michael. He will be giving us a law kind of solicitor point of view on a lot of your buy-to-let questions. And just finally, when I do send out that email at the end, there will be a survey attached. If you could please fill that out, that would help us greatly, and we can tailor these in future to how you'd like them as best as possible. So now that we're all here and present, we'll kick off with Nicky, who's going to give us an overview.
Thanks, Karen, and thanks for everybody joining us today. So yes, as Karen mentioned, I'm just going to kind of give a really brief look at what's happened in the last 3 months in terms of kind of the rental market and what's happening out there. So we have seen stock levels improved slightly compared to where we were in the second quarter of 2020, but they're still really much lower than we've seen in previous years. That coupled with extremely high demand across all property types, all locations, has led to an increase in rent. So what we've seen is across Scotland, the average rent is at an all-time high of 9.9%. And it has increased by 9.9%, and the average rent is now £970 a month, with the average time to let 18 days. We are pretty safe to assume that it's not too far off when we will see that the average Scottish rent is going to be exceeding £1,000, which will be the first time ever. So that seems to be ever closer. Focusing a little bit more then on the Edinburgh market. So it certainly remains very challenging for people to find a property to rent in the capital. That is mostly due to the low levels of stock again. And again, that has seen rents increase. So we've seen an increase of 15% year on year, with rents now an average of £1,283 in the capital, and just 15 days for an average time to let. So we've mentioned kind of low stock. That is, there's a number of reasons for that. One of which we're finding is that tenants are renting for longer than they've ever rented before. So we're not getting that stock returning back to the market. So that's great news for you as a landlord if you've got great tenants, but it is creating gaps in the market where stock is not coming back. So as a buy-to-let investor, it would be great for you to jump in and plug those gaps. At the moment, certainly, there's a high demand for good quality properties. Tenants have good rent levels they can pay. And even though there are issues, obviously, that the government have recently announced, which we'll chat about a little bit later, that may make some of you a little bit nervous about getting into that kind of side of the market. From my experience and looking what's happening at the moment, certainly, it definitely, the buy-to-let market in Scotland certainly remains an excellent place to invest, certainly based on recent times. So that's kind of in a nutshell what's happened in the last 3 months.
Brilliant. Thank you so much, Nikki.
Thanks.
So now we're going to move on to our Q&A, and our panelists will help us answer all of these questions. But like I say, if there's anything you want us to expand on, just pop it in the Q&A box at the bottom and we'll get round to it. So our first question is actually for Nikki. And this question is, can I please have more information on the new eviction laws in Scotland?
So this is a hot topic at the moment, and I'm presuming that you're referring to the recent announcements about a potential ban on eviction and freezing rents. So yeah, we don't really have much more information on that at the moment. So it's worth noting that when the announcement was made, it was made with no prior consultation to any other regulatory bodies, which is different from what happened during COVID, when changes were made within the industry, and the government kept us informed of their plans, what they were going to do. That has not been the case in this instance. It is also, it's only proposed legislation, and it is yet to be laid before Parliament. Draft legislation is not expected now for a couple of weeks, and there's certainly been no concrete guidance from the government on how these measures may operate. So we're all a little bit in limbo at the moment. But what we can suggest is how we believe it might work. So how we believe, and this is only kind of based on kind of experience and what's happened before, is that the eviction ban would work similar to the eviction ban that was in place during COVID. So it means that as a landlord, you should be able to still serve notice on your tenant, because not all notice ends in eviction. So you should be able to still serve notice on your tenants. And it's only then if your tenant doesn't vacate and you're needing to evict them, that you would go to the next stage, which is applying for an eviction order from the first tier tribunal. They would consider your case, and if they felt appropriate, they would enforce or give an eviction order. So there are some instances where an kind of an automatic kind of eviction would take place, and we believe that they are going to be for things such as antisocial behaviour, criminal behaviour, or cases of extreme rent arrears. So you can go and you can get that eviction order from the first tier tribunal. What you can't do just at the moment, except for those instances I've just mentioned, is the sheriff officer can't enforce that eviction. So when an eviction ban is on, the sheriff officer can't continue with the eviction unless it's for, as I say, antisocial behaviour, criminal behaviour, or severe rent arrears. So you would need to wait until the eviction ban had passed if you were wanting your tenant to leave for another reason, and you were wanting to go through with an eviction. So we don't have any clarity on when that will come into force, although the First Minister did suggest that if it does come into force, it will be at least until the end of March next year. So whilst we still don't have any concrete information, the suggestion is you can still serve notice, and then if you do need to evict, you can apply for that eviction order. There will be some exemptions, but in the main, sheriff officers won't be able to actually action that eviction order until at least the end of March next year. So yeah, we kind of wait and see a little bit, but that's generally what we're thinking around the eviction ban.
Brilliant. Thank you. All right, our next question is for Paul. In a fixed rate buy-to-let mortgage product, how soon can you look into fixing another rate with perhaps a different lender if your existing rate is coming to an end?
Good afternoon, everyone. Yes, very good question. The timescale for that would be 3 to 4 months prior to the fixed rate of your mortgage expiring. There are two things you can do here, as long as you want to keep the property, that is, of course, and you have a mortgage on it. One is for a broker to look at another fixed rate mortgage for you. and it's usually done 3 to 4 months before. However, a broker will also go back to your existing lender to see if the products that they offer may be better than the remortgage deals. So there's two options here. One, the broker would go back to the existing lender to see what the rates are and compare them to the fixed rates on the open marketplace. Something else to just bear in mind, hot off the press, that the interest rate, the Bank of England have just raised the interest rate from 1.75 to 2.25. This is the highest rate for 14 years. So if anyone does have a fixed rate that's coming to an end, I'd strongly recommend that they actually look at this as soon as possible, because what's going to happen is over the next few days, lenders will readjust their fixed rates, and they're only going to go one way, which is north, which obviously isn't great for people who have mortgages. Obviously, this has been done by the Bank of England, and the reason this has been done is because inflation, which is the measure of how prices rise over the last year, is at an all-time 40-year high of 9.9%. And obviously, this has been done to try and stabilize inflation. But what the bottom line here is, what I'd recommend you do is try and get your mortgage reviewed as soon as possible. And that actually might count for people who are still actually in fixed rates, because it might be more beneficial to move away from that fixed rate, even if it does have a very small, what we call early repayment charge, which is obviously, if you leave the mortgage early, you usually pay this, but it might be worth speaking to a broker like ourselves about this.
Brilliant. Thank you so much, Paul. Our next question is again for Nicky. What are your thoughts on having virtual property walkthroughs for rental properties, and would this be useful to selling agents and protect prospective tenants?
Okay, so yeah, so during the pandemic, we saw the rise of kind of property video tours and virtual viewings because people weren't able to physically view a property for rent or for sale. So we certainly saw an increase in people using that as a tool for advertising, which really hadn't been something that a lot of agents were doing. And the feedback that we get from tenants is, yes, it's really helpful. Especially for a rental property, quite often as part of the advertising, we don't include a floor plan. So if you have a video tour of a property, it gives the potential tenant an idea of the flow and the layout of the rooms that isn't always obvious from just photographs alone. So what we find is by the time people have seen the photographs, watched a video, and then are arranging a physical viewing, it tends to be, they're pretty keen by that stage. So it kind of reduces maybe your time spent having to carry out viewings or potential time wasters. By the time they've seen photographs and a video, they're pretty serious about the property. So it certainly is kind of advantageous in that respect. Also, not everybody that's renting in Edinburgh lives in Edinburgh at the moment and can't physically get here to view a property. So we've seen an increase of people that are kind of renting without a physical viewing. If you can send them a video of the property, a video tour, as long as it's true representation, it's up to date, then you should be happy to go ahead and rent without actually having a physical viewing. The virtual walkthrough is slightly different from just a video tour. So a virtual walkthrough is more similar to a physical viewing, except the agent or the landlord is in the property and the person that's viewing is at the end of the device, and they're walking them through as you would maybe for a physical viewing. And kind of feedback would be that's maybe more helpful if somebody isn't kind of around and is looking to buy a property, but they tend to be happy with just a video tour for a rental. So what I would say is a virtual property walkthrough worth it? Then yes, it's advantageous. But if it would be timely in terms of, you need to go to the property and physically do it with each person. And there presumably will be charges, maybe if someone's offering professional services or if you're happy to just do it yourself. I would say just being able to take a video, walking through, sending people the link to the video is more than adequate. But anything that you feel is helpful, then there's nothing wrong with it, that's for sure. But generally, any kind of video aspect for advertising is definitely what most potential tenants expect at the moment. Some level of that, yeah.
Thank you. My next question is for Michael. What are the main challenges of buying a property for holiday lets from a tax and financing perspective?
Yes, hello, good afternoon, everyone. Okay, so first I'll caveat this by saying that the question is possibly one that is best answered by an accountant or a tax specialist. As a property solicitor, I have a working knowledge of these things, but I would caveat by saying that I would seek separate and specialist advice from your accountant, an accountant or tax advisor. So the law regarding furnished holiday lets, FHLs, for tax purposes is quite prescriptive. FHLs, furnished holiday lets, come with tax advantages, such as being able to claim capital allowances for capital expenditure on furnishings and equipment. That's not available to you for a normal residential let. So that obviously is one big advantage. Profits also are deemed to be relative earnings from pension purposes point of views. When one comes to dispose rather than capital gains tax, if it is a true furnished holiday let, one can then qualify for business asset disposal relief. And that's 10%, which is far less than capital gains. So there are advantages. In terms, however, of the qualifying as a furnished holiday let, as I said, it's quite prescriptive. The definition says that the property must be a commercial letting of a furnished holiday accommodation, and it must be let on a commercial basis with a view to realizing profit. It also has to be available for at least 210 days in any given tax year and to have been rented for 105 of those days. None of the rental periods can be longer than 31 days. So it's quite prescriptive that way. And it's very, very important, as I say, that if you were thinking about doing this, you would speak to a tax advisor. Paul would probably be in a better position to advise on the borrowing scenario there for furnished holiday lets as opposed to the usual buy-to-let. He'll be more aware of the nuances than I would as a solicitor, I think. Okay.
Thanks very much. Oh, Paul, sorry, you're on mute.
No, you're still on mute.
That's
there
it. Sorry,
go.
apologise. That's covered. That I can cover that off in the next question. That's fine.
Okay.
Brilliant. Thank you very much. So that does bring us to the next question for you, Paul. So can a buy-to-let mortgage be used for any model of letting, including serviced apartments and shorter term lets?
Yeah, well, short-term lets is really classed as a holiday let, really. You can class it as Airbnb as well if you want. I know there's a big, massive issue just now with, especially in around Edinburgh. I'm not sure of the regulations. Maybe Mike knows more about that, and Nicky knows more about that than me. But certainly, Airbnb mortgages are, believe it or not, still available. Although there's very few lenders that look at them and do them. But the holiday let scenario was fine. There's a few lenders that will do this. It's a limited marketplace. Not every buy-to-let provider will do it, but you can get one. It tends to be a slightly bigger deposit than the normal kind of buy-to-let, which is sort of 25% deposit. Usually these ones are between 30 and 40%, but they can be done. They are analysed in the same way as a normal sort of rental buy-to-let. They don't take into consideration the estimated amount of money that you receive from the Airbnb holiday let style process. They use like a normal rental, so say a 2-bedroom flat, for example, in Stockbridge, where you can maybe get £1,300 a month for. That's how it's analysed. It's not analysed on, oh, I'm going to rent my property out in the festival for 4 weeks and I'm going to make 10 grand. It doesn't work like that. It works on what you can get on a monthly basis. So yeah, these holiday lets are the most popular one, and it comes under that kind of sort of auspice, if you like, of the holiday let, although Airbnb comes under that as well. Unfurnished in serviced apartments, I'm not quite sure what what somebody means about a serviced apartment. It doesn't, like, that question doesn't make sense to me, really. I'm not sure. Nicky, have you heard of this, serviced apartments?
Yeah, so a serviced apartment tends to be in a block, and it would be akin to kind of a hotel situation, but they're individual, kind of almost self-contained rooms, and you might get housekeeping and kind of stuff like that. So it's like a hotel room, but is my understanding, I think.
Right.
But
I'll be honest,
yeah,
it's a new one on me. I've never heard of anyone being able to get a mortgage on that before. I'll be
yeah.
dead honest with you. It's something I need to look into, but I've not ever had a request for that before. Sorry, Mike, can we go back to the sort of the question previous that you wanted me to answer? Sorry.
Yeah, it was just regarding that you kind of answered it, Paul. It was regarding
Right, good.
Following the question, I think, was yeah, what are the challenges of buying a property for holiday lets from a financing perspective?
Okay.
You've covered those off.
Yeah, that's fine. Yeah, fine. Yeah, so that's me. That's what one answered. Okay.
Brilliant. Thank you so much, everyone. So the next question is open to both Michael and Nicky for comment. And this person has asked, how does the panel think the Scottish Government's rent freeze and eviction moratorium is going to affect the local rental market?
Okay, will I go first?
Yeah, you can go first.
So, right, let's take it as a given that the driver for this comes from a good place, and it's seen as being, trying to help those who are obviously challenged by the current economic headwinds. So, well, that's good. To have done it in the way it's been done without proper due consultation, I feel is knee-jerk. I feel that it's more about politics than anything else and wanting to grab a good headline. There is no other sector of the economy that I'm aware of that the government would come to you, the government of the day would come to you and say, well, that's it, you can't put up your prices. You've just got to suck up all the costs that are coming your way, as in this case, a landlord, for getting your gas safety certificates, your PAT testing, any repairs you've had to have done. You're no doubt paying more than you once did, but that's tough because you're not going to be able to recoup that at all. So I do question that side of it. My concern is that landlords, for some, this could be the straw that breaks the camel's back, and that they could think, actually, being in this game is just not worth it anymore. You then see they dispose of properties, there's fewer rentals available to people. The other side of it is that landlords perhaps think, well, I did have a schedule of works planned for this year to improve that flat, but if I can't recoup any of the cost, albeit that the improvements I intended to make were, for example, double glazing, and they were going to save my tenant money on their heating bills, I just can't do that anymore. So housing stock could suffer also. So yeah, I think maybe the driver has come from a good place. I think the implementation is half-baked, and I think the thought process hasn't been undertaken carefully enough, quite honestly.
So I would agree with all of those things. So I would agree with those things, but maybe I can be slightly more positive, well, not more positive than Michael, but just in general about how people might be thinking about things. So we know we can't predict what's going to happen, but these were kind of my initial thoughts. As I say, it's happened before during COVID, and there were restrictions on kind of evictions. We couldn't do it. So we've kind of gone through this. Admittedly, we knew it was coming and there was more discussion. And it was everybody, as Michael had mentioned when we were chatting about yesterday, everyone kind of pulling together as opposed to maybe one sector feeling a little bit targeted this time round. But we managed to ride that out. The rental market in Edinburgh particularly has always remained strong, and there have been lots of bumps and turns and winds in the road, and we've managed to kind of ride through those. So I would kind of try to avoid any initial panic or knee-jerk reactions. As I say, the stock levels are already low. So if we see landlords having to pull out of the rental market, then that's only going to cause even more of a crisis, really. So I would try and avoid maybe any knee-jerk reactions. As I said earlier, you can still potentially serve notice on your tenant. So it doesn't mean that you're stuck with them. There are still options available. And it will also depend a lot on the landlord's individual financial position. You know, can you maybe ride things out a little bit if it didn't work out? The other thing I'll touch on a little bit about the rent freeze. I mentioned the eviction ban earlier. The rent freeze, if it goes ahead, is likely to be from the date that the First Minister made this announcement, which was the 6th of September, and it's likely to be in place until the end of March. Any rent increase needs 3 months notice, and any that you had already put towards your tenant before the 6th of September should still be able to go ahead. And bear in mind that you can only increase your rent every 12 months. So if this only lasts until March next year, you know, you might not have needed to be increasing the rent during that time anyway. So whilst my initial thoughts are this isn't great, people are being targeted, it could cause issues, I think if you kind of look at a slightly bigger picture and try not to be too nervous about things, we could ride it out.
Brilliant. Thank you so much for that discussion there. Our next question is going back to Michael, and is it better to set up a company to purchase a buy-to-let property or to do it through personal accounts?
Okay. Again, I'm going to caveat again by saying speak to an accountant, speak to a tax specialist, especially speak to an accountant on this matter, as well as listening to what your legal advice might be. And there's also, again, a crossover, excuse me, probably for Paul in certain regards. So firstly, I would say it's a question to be looked at on a case-by-case basis. It will, whether it's a good idea or not, will differ from case to case, person to person, and it will depend upon the circumstances of that individual, in terms of their own income tax position, the expected profit they would hope to be making from the rental, whether or not they're going to require immediate access to the profits arising from that rental. Being a limited company, it's an entirely separate entity from the individuals, the directors of the company. So there is limited liability benefits to be had. However, there's also going to be additional accounting costs in terms of setting up the company, registering the company, and then the rental, the accountancy going forward. One becomes liable to a far more stringent controls through the Companies Act. Your accounts will become public knowledge. So if you're okay with that, that's fine, but your accounts will be published. Everyone will be able to see, what sort of income you're making. So there is that. Corporation tax returns are going to be more expensive, and you may want to be using an accountant as opposed to doing them yourselves. So there's those extra costs to be had there. In terms of if one did set up a limited company, it's going to impact, for a brand new company, it's going to impact on your ability to borrow. And Paul will be able to maybe come back on that. And some of the benefits of the limited liability you're going to lose, because if you can get borrowing, you're going to be asked to give personal guarantees anyway. So in summation, generally, if a buy-to-let purchaser you wanted to explore this, then certainly, yes, I would recommend doing so. I'd recommend getting in touch with an accountant to undertake an exercise to illustrate the potential position either way, whether you did it as a sole trader or a partnership or whatever, as opposed to a limited company. Because unfortunately, it's not just a simple answer, a simple question to answer. There's no one size fits all for this one.
Yeah, I just like to echo what Mike said there. We're always told by the powers that be that whenever you want to look at setting up a limited company for a buy-to-let, you must speak to your accountant to get the advice on this, to see if it's the best course of action for you to take or not, because it might not be, and it depends on a whole range of factors depending on your personal circumstances.
Thanks very much. So we're going to move on to the last of our pre-submitted questions. So I would like to remind you guys, if you would like to ask us a question before you finish up today, now would be a good time to get it in our Q&A box. It's just at the bottom of the screen. Like I said before, we'll do our best to get around to them as long as it's within the time scale. And of course, if our panel needs to look into the answer a little bit more, we can always send you an email follow-up as well if that's more suitable. So the last question I have here is for Paul, and it's: how long should a company be trading before lenders consider their buy-to-let application?
Okay, obviously self-employed, whether it's sole trader or limited company or partnership or whatever, in theory 2 years. Some lenders will accept 1 year, but it has to be extreme circumstances where the profits have been really, really high. As I say, whether it's net profit, sole trader, or dividend, salary, or a combination of net profit as well. So 2 years in theory. The good news, though, is that if you have got 2 years, buy-to-let mortgages are mainly based on actually the rental income in relation to what your mortgage payments are, as opposed to your income. You could have a net profit of as low as like £1,000, £2,000, or whatever. They do take the average of the last 2 years. Yeah, so I mean, as long as the business isn't in a loss situation for the last 2 years, as long as it's in profit of some sort, majority of lenders will definitely look at that, and they will do it mainly on the actual rental income in relation to what your mortgage payments are. It is quite a long calculation, which obviously I'm not going to verbally tell you, because it's best if somebody speaks to me directly about this. And it depends on the price of the property. Obviously, your 25% deposit minimum, and then there's a calculation done on that to work the rent out. To work out the mortgage payments in relation to what the potential rent could be, and that's how these are actually calculated out. So basically the bottom line here is minimum income's fine, 2 years generally, 1 year potentially, and it's done on the calculation with the rent versus the mortgage payments.
Brilliant, thank you. I can see a wee question in the Q&A box here. I can answer this one first. So, is the recording going to be available after the webinar? Yes, it is. It will be online within the next couple of days. We'll pop it up on YouTube, and our videographer will edit little bits for social media as well. So I recommend keep checking our social media. We'll post it on Facebook and LinkedIn, and that will redirect you to YouTube. And if you haven't yet already, please sign up to our newsletters, because we pop them in there. And whenever we do webinars like this, the recordings will be there. So in case you can't make them for whatever reason, please know that you can catch up with us. I've got another question here. So it's open to the panel, whoever feels fit to answer. How many buy-to-let mortgages might a lender consider providing to any one individual?
I can answer that if you want, if that's okay. Yeah, some lenders are unlimited, some lenders are 3. This is one particular lender, obviously. And some are more than 3. There's no, every lender's different. As I say, some are unlimited, some are 3, some are 5. But then again, if you're a mortgage broker, you can actually do 3 with one and then 4 with another, etc., etc. So,
Okay. Brilliant, thank you very much. And I believe that's the last of our questions that have came through. So if there's any that you would like to ask us, please just respond to the emails that we're going to send out after this with all of our extra information. But thank you for coming along. Please look out for our next webinars. So we've got an East Lothian focused one next Thursday. We've got a Mid Lothian one at the start of October. And at the very end of October, we're doing an in-person first-time buyer event at our George Street Property Information Centre. So if you know any first-time buyers on the market, please do encourage them to come along. The information is on our website. And like I say, with the webinars that we're going to post, this will all be on social media and in our newsletter. So please do try keep up to date if you can. And please do fill out the survey that we're going to send out. As always, we like to tailor these to suit you as best as possible. Thank you, of course, to Paul, Nicky and Michael for all of your effort and expertise that were shared today. And thank you, everyone, for your pre-submitted questions and for coming along.
Karen, I was just going to jump in and say, it didn't happen on this time around, but quite often on these previous events, people have asked questions about where is the best place to buy a buy-to-let property, what's offering the best yield, what kind of postcodes are working at the moment. And it was just in case anybody that had joined but maybe hadn't asked that question, if they did want that, then we do have that information. And I'm sure if they were to get in touch with you, either you can send that or I can get in touch, but we've got that information. And I know in previous events, people have asked that. So yeah, we've got that if anyone's interested.
Yeah, brilliant. So my email address is marketing@espc.com. So any information you would like, I can do my best to send over the article or video that we've got on that for you. And Nicky has just reminded me, we also have a lettings and buy-to-let specific newsletter that goes out once a month. So if you haven't signed up to that already, just let me know and I can get you on our subscription list. But that has every tailored article that we put out per month and lots of insight from Nicky and the mortgages team. So yeah, thank you everyone, and we'll see you next time.
Thanks very much.
Bye.
Now, bye. Bye.